Hello. Today, I want to share with you a story about the origins of this bull market. Now, like any good story, it starts unexpectedly. Back in 2022, as you may recall, we were dealing with inflation at levels we had not seen in decades. And on a day, October 12th, 2022, there was another inflation report that initially sent the stock market down. It did not look good. But as we look back, that ended up marking the beginning of the bull market. So you may wonder, what causes the stock market to go up and down? Is it as random as a roulette wheel? And some days it might seem that way, but thankfully the stock market is not up to chance. It is, in fact, a weighing machine. Now, the credit for this idea goes to Benjamin Graham, who you may have heard of, was a well-known investor from the 1930s. He was a mentor to Warren Buffett. And he famously wrote that in the short run, the market behaves like a voting machine. But in the long run, it acts like a weighing machine. So said differently, I sometimes think as the short term being like a middle school lunchroom. You can probably relate to that. Remember back to those days. The long run, the stock market weighs two things. It weighs company earnings, and it weighs what people will pay for those earnings. So let's get out the weighing machine for this bull market. And as you can see in this chart, we have what contributed to each year's stock market returns. And these are all been in the bull market that we've seen. In 2023, the market rose 26%, and 3/4 of that growth came from investors simply willing to pay more for the same dollar of profit. That was anticipation, it was a bet, and thankfully those investors were right. And in 2024 and 2025, earnings delivered, as you can see from the chart. And it propelled the S&P 500 to increase by 25% and 18% respectively in those years. This year in 2026, earnings growth continues at a fast pace. And when you think back on it, you can say, well, this is obvious, right? Inflation improved, short interest rates came down, earnings grew, of course stocks went up. And it's only obvious in retrospect. Each step along the way, there were vocal reasons as to why this bull market was not going to continue. In fact, in 2022, at the beginning, the Bloomberg economists surveyed had a 100% chance that the US would go into a recession in 2023. 100% chance. That did not happen. In 2024, there was a mantra that there's earnings growth isn't going to last. Well, it did. In 2025, tariffs hit, and we've seen the economy evolve. In 2026, inflation is back, and are we in an AI bubble gets a lot of the airspace. As you can see, there's healthy skepticism all along the way. So that takes us to now, and you can see that from this chart that the skepticism is actually pushing multiples down towards their 5-year average over the last year. That's because earnings growth is accelerating and surpassing the stock market growth. So all of this said, it's important to keep in mind that there's always noise in the market, just like that middle school lunchroom. And that noise can influence the stock market for days or months at a time. Instead of listening to the noise, focus on weighing company earnings. Thankfully, this bull market is backed up by earnings, as we've seen from the slides. So I'm Kevin McLean. If you have any questions, feel free to reach out to us at Sieverson Strachey.